Hi, thanks for joining us for a Teletown Hall with AARP's ElderWatch. This is an interactive event similar to a call-in radio show. Today, we're taking your questions related to financing life in retirement and beyond. My name is Jess. I am the program specialist for ElderWatch Colorado. ElderWatch is a 20-plus year partnership with AARP and the Colorado Attorney General's Office. Our goal is to support and protect older Coloradans through education and outreach around financial literacy and fraud. ElderWatch does not offer financial or legal advice, but we do have a volunteer-staffed fraud victim support helpline should you or someone you know be the victim of fraud, or even if you just want to know whether an offer you found is too good to be true. If you need to call us, our phone number is 800-222-4444, select option 2. Today I have the honor of introducing our guest speaker, Colorado's Treasurer, Dave Young. Dave has a lengthy history of serving Coloradans as a K-12 math teacher, a union leader, a state representative, and now as our state treasurer. Thanks so much for joining me, Dave.
Happy to be here, Jessica. Thanks for having me on.
Yeah. So while we're waiting for some questions to come in, I want to start with a very important topic. And so money right now seems tighter than ever. So if people haven't heard of this one great program that might help with our pocketbooks just a little bit, the Great Colorado Payback is a wonderful resource to know about. For those who haven't heard of it, what is it?
Well, the Great Colorado Payback is specific to the state of Colorado, but other states and even countries outside the United States have unclaimed property programs. And so when a company, a bank, or maybe a previous employer loses track of you and can't return your money, they're required by law to turn those assets over to the Treasury. It isn't, in every state it isn't the Treasury, but in most states it is. Some states it's the controller or some other agency, but there's pretty much a program in every state. And so we hold that money in trust here in Colorado until you come forward to claim it. And in Colorado, there's no time limit to claim your money. So my team, I've got a great team. They work tirelessly to get this money to its rightful owners. And so right now, we're holding about $2 billion for over 15 million individuals, businesses, and nonprofits here in the state of Colorado. And the program's getting better and faster at doing its work every year. This fiscal year alone, we've returned more than $130 million, shattering our previous record. So, often when I get introduced as treasurer, people think I'm asking for money, but this is a situation, and it's very legit, where we're actually trying to give you back money.
Right. And I mean, I searched my unclaimed property when I first moved here, and I found that I had it in multiple states for a long time. So there's going to be more in there than people realize. But I know that you mentioned a previous employer. What are some of the other reasons that people might have unclaimed property?
Might be a forgotten savings or checking account. Now, typically those a bank won't make a savings account become dormant and then transfer it. But, if they try outreach and there's no response over more than 5 years, then they're required to send that money to the Treasury. And we also get safety deposit box contents from people who stop paying the rent on the safety deposit boxes. We don't have other kinds of property like cars and bicycles and things like that. But the contents of safety deposit boxes we get from banks as well. But it can be uncashed checks. We get people that don't cash their tax refunds or old paychecks, overpayments or deposits on utility bills, an insurance premium payout, stocks, bonds, mutual funds. It's really a lot of different things. It's pretty fascinating. It's one of the most fun parts of my job is to work with a team that does this work. And, I know firsthand about this because years and years and years ago, my grandmother took out 3 life insurance policies. I kind of joke and say it was her parting gift. She didn't tell anybody in the family that she had done this. So she had life insurance policies. We didn't know about them. Unfortunately, through some odd circumstances, the address that you wrote into the policies, or the place where the insurance company was supposed to mail the benefit check, changed. And so when she passed away and they mailed the insurance benefit checks, they went to an address that no longer existed and came back to the insurance company as undeliverable. Mm-hmm. We weren't looking for the checks because we didn't know the policies existed. And so the money just ended up going to the Treasury. And eventually we saw that it was there, and we submitted claims for it and got the money.
So, Dave, on that topic, how do people get the money? How do people find out if they have unclaimed funds?
Well, we actually have a very easy-to-use website, and I did hear at the front end of the show people were advised to get a pen and paper, and here's a place where you might want to write this down. The internet address, the URL, is unclaimedproperty.colorado.gov. I'll repeat that, unclaimedproperty.colorado.gov. And so you can go there, and it's legit because it's a .gov address. But I'm going to give you a couple of other addresses as well in a moment, and they may not necessarily seem as legitimate. But we've done everything we can to help people feel more comfortable interacting with a website. You type in your name and a zip code, and then you'll see results. If you have a very common name like mine, you may see a whole lot of results come back, some of which are not your claims. And so you kind of have to click through and see which ones you think match your history. And then when you kind of get deeper into the process, you can select the ones that you're certain are your claims and then submit a claims form for that. We go through a very rigorous process because we want to be sure that we return the money to the rightful owner. So often we ask for additional follow-up information after the claim has been submitted. Typically, the entity holding your money that transmits it to the Treasury will send along some identifying information like a Social Security number or something like that, and we keep that secret and hold it and then ask for verification with some identifying information like that to verify that it's really your money. Nothing worse than to give your money to the wrong person.
Right.
So we do go through a very rigorous process, and sometimes people get frustrated. It's like it's taking so long, but we're just doing what the law tells us we have to do, and that is to do our due diligence. But we're doing some pretty interesting things. We are modernizing the system to actually help us really identify people that we are absolutely certain are the owners of the money, or in the case of a safety deposit box of property. And what we're doing right now is proactively sending checks to people without their needing to even file a claim. And so we've recently sent out a huge number of checks, 88,000 checks to people, and we're here in the state of Colorado, and we're trying to get the word out. If you get a check in the mail, it's legit. It's from me. It's got my signature on it, and it's got the letterhead from the Treasury. You could take it to the bank and cash it. Now, I did mention that there were some, if you don't live in the state of Colorado, a couple of other websites you can go to, and again, you might want to write these down. The National Association of State Treasurers runs a couple of websites that allow you to check in other states. And so one address you could use is unclaimed.org. And that sounds pretty legit. The other one kind of sounds a little scammy. We're trying to change it, but it's missingmoney.com. And both of those websites have a map on there, and you can scroll and find the map. And then if you lived in another state, or we even have provinces in Canada that participate, if you've lived these different places, you can click into the program for that state or province, and you can actually check the program there. And Jessica, you mentioned that you had done that, and actually discover if you left some money or some property behind in another location. And so there's plenty of opportunities here, and we know how tough it is right now for people. I mean, particularly if you're on a fixed income, times are tough. And so you may not be aware. It's not because you did anything wrong or were careless. but it's not unusual for people to get separated from some amount of money. It might just be a small amount, less than $1, but there are times where people have found thousands and thousands of dollars. We've had some $1 million claims. They're typically heirship, where somebody passes away and then their heirs are trying to recover that. So we're really anxious to get this money back into the hands of people.
Thank you, Dave. We do have a couple questions in the queue. One of them is about unclaimed property. I have Tim from Arvada. Tim, looks like you have a question related to unclaimed property as well.
Hello, can you hear me?
Hi. Yep, we hear you, Tim.
Hi, we can hear you.
Okay, so before turning 65, I had gotten some letters from the IRS, and one of them was saying that I had money from a previous employer. I just got on this call. I'm not prepared. I'd have to go find that paperwork. But I had thought that I probably had moved anything that I had invested. But according to the IRS, there's money out there. It gives an address to a place in Texas. I have tried to locate them and contact them. That's been impossible. I'm trying to find out if I really do have this money available, and, how do I proceed?
Yeah, let me give you, Tim, thanks for calling in. I appreciate it. And this, like I said, is not uncommon. People do move around, and sometimes they're unaware that there's some money left behind. I assume that this is probably in Texas. I'm going to give you a couple of URLs. One of them is unclaimed.org, unclaimed.org, and the other one is missingmoney.com. And as I said before, both of those websites are run by the National Association of State Treasurers, Colorado, and I am a member of the National Association. And both of those websites have a map, and you can scroll and find the map and then click into the location where you think the money is. In Tim's case, it sounds like it might be in Texas. And then check that out, and I think that the map will, when you click into it, will connect you to the program in that state, and then you can go through the process, the instructions that are there to see if that claim is there. We're more than happy to help out. My email address is treasurer.young at state.co.us. So, Tim, if you don't figure it out, send me an email and we'll try to track it down, try to help you track it down. It's fun to do this work and sometimes very surprising. I might mention that the National Association of State Treasurers has actually set up a program, and it's another acronym, SURCH, S-U-R-C-H. We're trying to help people with the mandatory distributions of their various retirement savings accounts where the distribution goes out, but it ends up going to the wrong address and bounces back to the plan undeliverable. And so we're trying to help get people united with those required mandatory distributions as well. So we're doing everything we can to try to make sure that people, as they are living in their great life in the senior years, have that sustainable financial support that they need. And part of that's getting back money that's rightfully yours.
So, Dave, just a quick question around the unclaimed property and not being sure if the messaging that you receive is legitimate or not. Do you receive, or rather, have you experienced people pretending to be unclaimed property, scammers? And if so, how can people verify if they are getting a legitimate note or if it might be a scam?
Well, it's a great question, Jessica, and I'm very sensitive to this situation because, unfortunately, the number of instances of scams and fraud have increased, as everybody knows, and so people are rightfully they're right to be skeptical and check it out. As I mentioned, you can go to our website, unclaimedproperty.colorado.gov, and you can just check independent of any communications you get from anybody to see if there's actually a claim there. I really do encourage you, if it's an email, not to click links in that email or URLs in that email. They may be trying to scam you through the email. So independently of the email, if you get something like that or a letter, I would go to if you're in Colorado, the unclaimedproperty.colorado.gov, and do your own independent research to make sure that it's a legitimate claim that they're approaching you about. Now, there is a group of businesses that are called locators or finders that reach out to people that they think have unclaimed property, and they will offer to track that down and get it for you for a fee. This is a legitimate business, and in some cases, it may be okay to use a locator or finder, but for most claims, you can do it for free. All you have to do is go to the website and start the process and handle that claim yourself. We do sometimes find that these businesses, these locator businesses, are helpful if it's a very complex business claim or a very complex airship claim. That support may be helpful, but there's a fee associated with it. They'll ask you to sign a contract, and once you sign the contract, even if you go figure it out on your own, you still have to pay the fee. So I think it's always worth, independently of whatever communications you get from anybody, going independently to unclaimedproperty.colorado.gov or to unclaimed.org and clicking into the state and verifying independently of the communications that it's legit. But everything we're doing is legit. We really are trying to get you back your money.
Perfect. Well, and thank you for that advice. It is definitely great, very pertinent, and with the proliferation of fraud and scams looking a little bit more sophisticated, it can be really tricky to understand whether something is a legitimate communication or not. So I love the advice of verifying it on your own. We do have another question.
These emails have become
oh my gosh, I know.
So, yes, they look legit. I mean, they copy everything, the graphics and everything else. They make it look like it's legit. So you really have to be on your guard.
Absolutely. Our next call comes from Brenda in Grand Junction. She didn't want to speak on the call, but she said that debt is keeping her up at night, and debt reduction is one of her goals, but she's on a fixed income, so she has a difficult time with budgeting and moving things around. Do you have any tips that might help her with debt reduction or any strategies?
It's a great question, Brenda. Appreciate you called in. I'm over in the Grand Junction area often. I travel across the entire state because I'm a statewide elected official. I feel like I should be in all areas of the state. So I love coming over to Grand Junction, and maybe at some point when I'm there in the next 6 months before I'm out of office, it'd be an opportunity to meet. But this issue of how to consolidate debt or deal with debt is really a tough one. And, what I typically find with people is particularly with credit cards, they're maintaining large balances, and, the interest that they're paying on that is really consequential and really steep. My top tip is always to consult a professional you trust before making any major financial moves. So, I'm here giving some education, but I'm not giving financial advice. You really need to go to a professional to make sure you're making the right moves for your specific situation. That said, any money that you can put against paying down the credit card so that you don't have, you're paying more than just the minimum, is really going to make a big dent into the interest that you're having to pay. And so, that might be one place you would ask the professional when you talk to them, say, here's all the different credit cards I have. How can I deal with knocking down the credit card debt? Another area, many seniors may have already paid off a mortgage, but if you're still carrying a mortgage right now, interest rates are a little bit up, but if they come down, might be worth checking out refinancing. If you're renting, it's not as easy to do that, but because there's no mortgage. But if you've already paid off your mortgage, again, before doing anything with a second mortgage or home equity loan, consult a professional before you're doing that. Mm-hmm. And then, lastly, I would say when you talk to a professional, if you have additional retirement savings that you've accrued over time, like a 401k or some kind of an IRA, before you dip into that, kind of lay out to the professional all the different assets and deficits that you have in your finances. I know it's uncomfortable to do that, to open up to somebody, but really if you trust a professional, if you open up the entire portfolio of your finances to them, you may discover there's some pretty easy things you can do that aren't going to result in any penalties or cost you, that actually free up money in your budget.
And so, Dave, I think that's excellent advice, and a good time to remind those on the call that ElderWatch and treasurer.young do not provide financial or legal advice. But one thing that I wanted to ask about is, I think that oftentimes when people hear about budgeting, particularly in the context of paying down debt, they're not sure how to prioritize things. And so two of the strategies that tend to be kind of popular are the snowball and the avalanche method when it comes to debt. So for those who don't know, could you explain how those work and kind of the trade-offs of choosing one over the other?
Well, I'm not sure I know the terminology well on that one. Why don't you give me a?
Oh, sure.
I may know them by other names.
Totally. So the idea is prioritizing your highest interest debt first, or your highest balance first. So, prioritizing the highest balance, takes a little bit more time. Prioritizing the highest interest, you're paying less in interest.
Yeah. Well, and I think I was referring to the latter when I was like, pay and finding that one with the highest interest rate and paying more than the minimum is really a way to avoid steep interest payments. Some people are paying more on interest than they actually have in the balance, on the principal, and that's just not sustainable. You're never going to catch up. So yes, I think the other thing is consistency. So I think sometimes people go, I'm going to do this, and they do it for 1 month, and then they stop doing it. And part of it's because they try to commit too much to solving the problem out of their budget and then find out that's not sustainable. So this is where a professional you work with can help you find a realistic amount. And then I think those two strategies are great strategies, looking at the one with the highest interest and trying to knock that down, and also at the same time the one with the highest balance and knocking that down. Both are accruing high interest amounts, and anything you do to avoid paying more interest is helpful. But what I typically see people is they get all jazzed up and they want to take care of this, and they bite off more than the budget can really do. And then all of a sudden they go a month or two, and then they find out they're not making the obligatory payments on some things that they absolutely have to, and they stop doing it, and then they don't come back to it and say, well, let's reevaluate, and maybe I was trying to put too much to that. But if all you're doing is paying the minimums on those credit cards, you're just really not going to ever catch up. So those two strategies, Jessica, are great strategies.
So we have another question, and this one is from Sam in Pueblo, and they want to know about the difference between senior property tax exemption and senior property tax deferral. Are you able to explain that difference, Dave?
Sam, thanks for the question. Actually, I was just down. My sister lives in Pueblo. I was just down there on Sunday visiting her, and and if you would look at your property tax bill. Not every county does it the same way, but there really are two programs, and they often get confused with each other. There's the senior homestead exemption. I think it goes by a different name now, but it's actually allowing you to be exempted from paying a chunk of your property taxes. And you actually work with your county assessor. You apply to the county assessor, and then when the property taxes are calculated by the county treasurer, there's a reduction. It's 50% of the property tax on the first $200,000, I believe. And so you're actually going to pay less if you apply to this program through your county assessor than you would normally be required to do. So there's not a standard application form, unfortunately. So you would go to the assessor's website in Pueblo County and search for the senior homestead exemption. It might be under a different name, but it's an exemption, and start the process. My wife and I have done that up here in Weld County, and so it's certainly, that's accessible. Another program which we have run through the Treasury is the is a senior property tax deferral program. And so I want to be sure you understand the difference. The one I just talked about is exemption. You actually are exempted from paying part of your property taxes. This other program is a deferral of property taxes. And, what sometimes people do is they're still paying property tax, even if they get exempted from some of them. And maybe they just like to defer it for a while. Maybe there's been some kind of a financial situation that's occurred that's put a real pressure on the budget for, a year or two, and they would like to defer those property taxes. And then when the financial burden eases up and they have the ability to pay those property taxes later, the deferral program is for that. And so you actually apply again through your county for this. It's not open right now, but it will open again. The applications will open again in January when those property tax bills come out. And so if you haven't exempted, and you're unable to exempt all of your property taxes, likely, if you want to defer the rest of them through this other program, you can do that. We work with the county treasurer's offices across the state to help manage this. And essentially what it is it's a lien on the property for the property taxes. And when I say that, people just kind of go they freak out a little bit. They're like, oh, we don't want a lien on our property. But a mortgage is a lien. Any loan is on property is considered to be a lien by definition. And so essentially what you're doing is you're taking out a loan against your property on your property taxes. It's a simple interest loan. So you take it for 1 year, and the interest rate is the rate on the U.S. Treasuries, 10-year Treasuries on February 1st. So whatever that interest rate is on those 10-year Treasuries is the simple interest rate for your deferral for that year. If you choose to continue to defer those property taxes year after year, the interest rate may change a little bit, but it's a series of 1-year loans essentially with probably a different interest rate, simple interest rate on each of them. Some seniors just decide to let their estate pay off their property taxes after they pass away, and so they just keep deferring and let their estate handle that later on. Some just might do it a year or two, and then when the finances change, they pay it back. It's an option. We don't want to see any senior lose their home. We want housing security for seniors. So between the exemption program, being exempted from some of your property taxes to ease some burden on your finances, we also want to ensure that if you're experiencing a tough time financially, that there's a safety valve for you to defer the rest of the property taxes until you can pay them back at a different time.
And Dave, just to clarify for those on the line, it is possible to have both, correct? You can both have
It is.
the exemption and the deferral.
It certainly is. So you defer part of it, and then, you exempt part of them through the senior homestead exemption program, and then you defer the rest if you choose to do that through the deferral program.
So Dave, on the topic of taxes, I actually have a question. So there are certain tax credits that are refundable and some that are non-refundable. For those who are unfamiliar, what is the difference and why might it help to file your taxes even if you aren't required to, related to these credits?
Yeah, that's a great question, Jessica. And, sometimes people get very confused by the terminology. I will tell you that the collection agency for taxes here in the state of Colorado, the Department of Revenue, is not within the Treasury. In some states, the Department of Revenue is inside the Treasury as a division of the Treasury, but in Colorado, it's not. And so, if you do have specific tax questions, you should call the Colorado Department of Revenue. Right now is not a bad time. A lot of times people call during tax season, and there's long waiting queues on the call-in. But I think the pressure's off on filing taxes now, and so if you have questions like that, you can certainly call them. But essentially, we in the state of Colorado, and I think it's not unique, there are refundable tax credits and tax credits that are not refundable. In other words, you in a refundable tax credit, whether you have the income to actually qualify at a certain level on a non-refundable, on a refundable, you're just going to get that refund. And let me give you an example of that. We had Tabor refunds that were being conducted through the tax process. And what happened was this is a refundable tax credit, essentially, and people weren't filing their income taxes, seniors weren't filing their income taxes, and then they weren't eligible to get their refund. And so, this is an example of a type of refundable tax credit. And, they weren't filing their taxes because they said they didn't have any taxes to pay. So why would I file an income tax return when I actually don't need to pay any income taxes? But this is a situation where if they did go ahead and file their income tax return, even though they didn't owe any money, have any taxes to pay, it opened up the door for them to get the refundable tax credit. And so, in a non-refundable, you would actually have to have the income in order to be able to get a certain amount of refund. And if you didn't have that level, you wouldn't get it. But on a refundable, like the Tabor refunds, just filing the tax return opened up the door. Whether you had income tax that you paid or not, you qualified to get that refund. I don't know if that's clarifying that very well, Jessica.
Yeah, so just to summarize,
try a different angle.
So just to summarize for our listeners, the reason that you would want to file your taxes, even if you aren't required to, is because if it's a refundable tax credit, you get that money regardless, right?
Exactly. Yep.
Perfect.
Connect the dots here. We had people then that were owed a Tabor refund and didn't get it, didn't get the refund because they didn't file the tax credits. That then eventually the money comes to the Treasury as unclaimed property. So
it all loops back in the end to unclaimed property.
It kind of all loops back together, but it's better to just not wait for 5 years for the
right.
refund to end up in unclaimed property. Just figure out how to get it when it's due to you.
So, Dave, it looks like another question that we have is around the buy now, pay later apps, which are they're essentially payment plans. So this caller wants to know, are these buy now, pay later plans, I'm assuming they're talking about things like Klarna, Are they a good idea? Are they a bad idea? Do they impact your credit score? What should we know about those?
Well, again, I just want to reinforce with people, I am not a financial advisor. So, I just want to qualify whatever I say in that regard. I'm happy to, and I know AARP is happy to direct people to resources and have volunteers that are available. But, there's lots of different programs that try to help people who may be experiencing some immediate financial stress. And I think one of the things that sometimes we see people get into, they may be called payday loans or something like that, where the money is coming. You've got a Social Security check coming, or you've got a para check coming, but finances are a little tight, and there's an offer to essentially advance you some money against the money that's going to come to you through that income source ahead of time. If you're really, I guess, in a very extreme financial situation, it may be worth considering. I'm the son of two Depression babies. My parents were born and grew up through the Great Depression of the late 1920s and the 1930s, and they never wanted to pay interest on anything. They always worked hard to save money, earn interest on the money that they saved, and defer the purchase of things until they had the money in the bank to buy those. It's not realistic for things like houses. That's why we have mortgages. And now with the cost of cars, it's not really feasible always to save for for a new car that way. But I think sometimes people have smaller amounts and they want them now. They want to purchase something now, and these little short-term financial opportunities seem good, but you need to read the fine print, because often the interest rates on those are extraordinary. They're way up double digits. And, it may not look like a lot of money dollar-wise, but the interest rate is pretty high. And so you might actually, if you really think you need to, utilize some kind of debt process to purchase something, you might find, as we talked about earlier, if you have a credit card and it has a really low interest rate, you might discover that actually just trying to figure out through that process instead of this other, that you're actually paying a much lower interest rate. But if you can defer the purchase and salt away a little money, a little at a time, earn interest on it, and buy it, a half year later, that's what I was trained by my Depression baby parents to do.
Right. Yeah. I mean, patience is a virtue, but like you said, sometimes the cost of things makes things a little tricky. We have time for one more question, and this question comes from Nancy in Denver. And Nancy writes, when a reverse mortgage is in place, how is the county assessor or treasurer notified of the holder's passing?
That's a great question, Nancy, and really one that you probably should go directly to the assessor and treasurer in your county to determine, because it may vary from county to county. But we are on the deferral program, and remember we talked about that earlier, where you are deferring your property taxes and paying them back later. We're trying to get a more consistent way to ensure that everybody is informed when someone passes away. There is a national list that has that, but it's a bit of a struggle to have that consistency. And so instead of me tell you, something that doesn't work for you, and it might work for me in Weld County, but it doesn't work in Denver, my suggestion is to reach out to the assessor and county treasurer's office in Denver to get your question answered.
Awesome. Well, thank you for that, Dave. Unfortunately, that is all the time we have today with Treasurer Dave Young. But Dave, could you repeat the website for the unclaimed property and the Great Colorado Payback for those on the line?
I will. It's unclaimedproperty.colorado.gov. Let me repeat it, unclaimedproperty.colorado.gov. And the national websites are unclaimed.org. The other one is missingmoney.com. And Jessica, if I could just quick do a pitch, if you've got people you know in your family that are still working, that are in the workforce and they are not saving for retirement, we have the Colorado Secure Savings Program. It's a state-facilitated auto IRA. It's a Roth IRA program, and it's available. It's a great program. It's portable. It's the savers account, and if they move from job to job, this account travels with them. And so you can go to Secure Savings, coloradosecure.savings.com in order to check that out. But, people who are already retired wouldn't be trying to tap into that. But we have about 40% of our private workforce here in Colorado, about 1 million people that need to find a way to save. And we've actually launched this program. We have over 100,000 savers already that have amassed well over $200 million in savings since we started a few years ago. And I'll just put in a plug. We ran that bill with the support of AARP in 2020. And so thank you, AARP, for helping us get this done. We are helping turn the corner on solving this retirement savings crisis here in Colorado. And we've also formed a partnership with several other states, Vermont, Maine, Delaware, Nevada, and Minnesota, and some others that want to join us. And we're helping those states get their programs launched as well. And so this is just as a result of the work that I've been able to get done since I've been treasurer, and it's a great partnership that we were able to work with AARP to get this Colorado Secure Savings Program going. So put the plug in with people that are still in the workforce and wanting to save. It's certainly a great option.
And so, Dave, thank you for plugging that. That's a great thing to bring up. Just very quickly for those on the line, who is eligible for that program? And then can you repeat the website one more time?
Yeah, so this is a private sector plan, and it is and I'm just double checking the URL to make sure I've got it.
Perfect.
The website is coloradosecure.savings.com. So Colorado Secure Savings is all one word, Colorado spelled out, securesavings.com. And it is a private sector plan. And here, the way it works is that any employer with 5 or more employees that doesn't already offer a retirement program for their employees is required to enroll their employees in Colorado Secure Savings Program.
Oh.
Now it's still voluntary for the employee. If they get enrolled and they decide, no, I don't have enough money in my paycheck to really put anything away right now, they can opt out, but they can go back in at any particular time. I'm not sure all employees explain in detail what the program's about, but they're required to enroll their employees in, and then we work with the employees. We're getting more and more adept at making sure people are aware of the program, and it is a great opportunity to put a little away. The interesting thing is that the default when you start is 5%, but you can actually control that. You can go all the way down to 1% or even stop it for a while and bring it back up again, or you can increase it beyond the 5%. There's an automatic escalator each year of 1%. So we're really trying to get people on the pathway to consistent saving so they can supplement Social Security. Social Security is a great program, but I think we all know it doesn't provide enough money to be sustainable in retirement. And so supplementing Social Security with a savings plan like this really does provide that opportunity. Now, if the employer already has a program like a 401k or whatever, they're not required to utilize this program. We aren't trying to overrun existing retirement savings plans, but if they don't offer one, this is the easy button for both the employer and the employee to do this. And again, I mentioned it's portable, so it's not hooked to the business. So they just use payroll deduction at the business to get the money into the saver's account. But it's the saver's account, it's portable, it moves with the employee, and we tested that out. I mentioned we have other states that are utilizing this as well. We had an employee in a business in Vermont that moved to Colorado and continued to save in their program when they started employment here in Colorado. So it's a great way to just consistently supplement your retirement savings. Easy button way for the saver for sure.
That's awesome. Well, I'm so glad to hear about that collaboration and that it's portable. And we all know that there is a retirement savings crisis right now. So I'm so glad to hear that there is a new vehicle to try to improve that crisis and make it not so much of an emergency.
You bet. Actually, Colorado's leading the nation in solving this nationwide retirement savings crisis. So you can be proud of the employees in the Treasury, the secure savings staff that are really driving this forward. We've got small but mighty teams that do this work for the residents of Colorado to help them be financially stable.
Wonderful. Well, Dave, I know you have a busy day ahead of you, so thank you so much for your time and your valuable insight, as well as what you do for Coloradans everywhere. We are grateful for you. To those on the call, thank you so much for joining us today. As a reminder, ElderWatch is here to help you if you are a victim of fraud, if you are unsure whether communication is legitimate or not, or would help finding access to financial literacy resources. If you need our support, give us a call at 800-222-4444, select option 2. For all of us at ElderWatch, thank you so much for joining. Thank you again, Dave, for your time. We hope that some of these tools, these concepts, these ideas help you make the rest of 2026 the best year yet. Until next time, my name is Jess Zawodzki. I hope that you have a wonderful rest of your day, and we'll catch you next time. Bye.